Hey guys, welcome back to our lecture on Negotiable Instruments Act 1881. Now you'll be understanding what is the meaning of negotiable instrument and also what is the definition of negotiable instruments, as well as what are the kinds of negotiable instruments which are recognized under this act, that is Negotiable Instruments Act 1881. So let's start with the meaning of the term negotiable instrument. So here I've split this term, that is negotiable instrument, into two words. So let's understand what is the meaning of the word negotiable. So negotiable means transferable by delivery, and instrument means a document by which a right is created in favor of some person. So instrument basically means a document. So when we say a document, it should be in writing only. That means the terms and conditions will be specified in writing, so expressly stated in words. So a document by which a right is created in favor of some person. That means if I am entitled to receive a money, I will be either drafting a bills of exchange or a promissory note or a check. So basically this negotiable instrument means an instrument which can be transferred from one person to other. So when you're transferring this instrument from one person to the other, means you're transferring the right in this instrument from one person to other. So what is this right? The right is to receive money from one person to the other person. So this is the meaning of negotiable instrument. So the term negotiable instrument means a document which is merely transferable by delivery. So in negotiable instrument, there are three kinds of instruments which are recognized under this act. One is bills of exchange, one is promissory note, and a check. So all these instruments can be transferred from one person to other. So this transferability is called as negotiation in Negotiable Instruments Act. And how do we transfer this? What is the mode of negotiation is what you'll be learning in upcoming videos. So let's see the meaning in detail. A negotiable instrument is a written and signed document entitling a person a sum of money specified in it, in which it is transferable from one person to another, either by delivery or by an endorsement and delivery. So as I said, the negotiation has two modes. One is endorsement and delivery, and by mere delivery. So what is endorsement? Endorsement is nothing but signing on the face of the negotiable instrument or on back of the negotiable instrument by the transferor in favor of transferee. So in the future, in this chapter, you'll be learning about the modes of negotiation, the meaning of endorsements, and also the kinds of endorsements. Now let's go to the definition of negotiable instrument, which is specified in section 13 subsection 1 of Negotiable Instruments Act 1881. It says negotiable instrument means a promissory note, a bill of exchange, or a check. So as I said, there are three kinds of negotiable instruments which are recognized under this act, which are nothing but promissory note is 1, bills of exchange is 2, and check is 3. So all these are instruments whereby a right is transferred from one person to other. What is this right? This right is nothing but to receive money from the person who is obligated to make payment. So here we'll come to kinds of negotiable instruments. In the very definition, the kinds of negotiable instruments have been specified. So we will be understanding the definition of promissory note, which is defined in section 4, and bills of exchange is defined under section 5, and check is defined under section 6. So let's start with the promissory note. A promissory note is an instrument in writing. As I said, instrument means a document, not being a bank note or a currency note. So I'll tell you why a bank note and a currency note is excluded once we'll understand the definition of promissory note. Containing an unconditional undertaking. Undertaking means promise signed by the maker, that is a person who is making this promise to make a payment of a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. So basically a negotiable instrument is classified on the basis of order instrument and bearer instrument. So what is an order instrument? An order instrument is an instrument where the transferee's name will be specified or payee's name will be specified, and bearer instrument is just opposite to order instrument, which does not contain name of the payee. So only a person who is in possession of this instrument will be called as bearer of this instrument. So I'll tell you when is promissory note applicable. So let's say I'm the debtor and you're the creditor. You have sold some goods worth rupees 10,000 to me, and I have to make payment. So for making payment, I would ask you a credit time. So you would be giving me 3 months of credit period, which means I have to make payment to the goods received after 3 months. So to have a valid proof of this transaction, the person who has to make payment, that is the debtor will be making a promise to the creditor saying, I will make a payment of so and so money on so and so period of time for the value received. So this is called as a promissory note. As I said, a promissory note will not include a bank note or a currency note. So here bank note or a currency note means one and the same. So when you see a currency note, it could be a 100 rupee note or a 2000 rupee note. There is a statement, I promise to bearer a sum of rupees 100, right? So here also one person is promising to the other person, I am paying you rupees 100. So this is also a promissory note. But a currency note or a bank note will not come under the purview of Negotiable Instruments Act 1881. Why? Because the power to issue regulations, make rules in relation to currency note or a bank note is only with Reserve Bank of India. Therefore, this Act of Negotiable Instruments will not apply to a bank note or a currency note, even though it is a promissory note. So this is the meaning and definition of promissory note. So let's see what is a bill of exchange. A bill of exchange is an instrument in writing. Again, all these instruments should be in writing, containing an unconditional order. So here order is made by the creditor on the debtor. So always remember, a promissory note is made by debtor and a bill of exchange is made by the creditor. So creditor is making an order on the debtor saying, you have received goods worth so and so money, you have to make payment to me on specified period of time. So therefore it is called as an order signed by the maker. That means the person who is making this bill of exchange will be called as a maker or the drawer. Directing a certain person, that is the drawee, that is a person who is obligated to make payment, that is the debtor, he will be called as drawee in case of a bill of exchange. To pay a certain sum of money only. So here the words only should be used. Why? Because this negotiable instruments can be used only for cash transactions and not transacting anything in kind. To the order of a certain specified person or to the bearer of the instrument. So this is the meaning of bill of exchange. So remember, a creditor who is entitled to receive money from the debtor, he will be making this bill of exchange. He will be making this order on the debtor saying, you have to make payment for the value received for so and so money on so and so time. So this is called as a bill of exchange. Next, moving on to a check. A check is defined under section 6. It says a check is a bill of exchange. So remember, all the features of a bill of exchange will also apply to a check, drawn on a specified banker. So you all know, when you open an account in a bank, you will be receiving certain documents. What are they? One is your passbook, one is your checkbook, and all those details which will have a valid proof that you are an account holder in so and so bank, right? So this bank will be giving a checkbook. Check is utilized for making payment. So for making payment, it can either make in cash or in check. So this check will be given by a bank. So therefore, in case of a check, the drawee will always be a banker and not expressed to be payable otherwise than on demand. So which means the payment on check is always payable on demand. That means if you receive a check, you can go present at your bank and immediately encash the money. You can receive the money either over counter or credit it to your account. That depends whether the check is crossed or it is an open check. So what is a cross check or what is an open check, you will be understanding in further videos. Next, continuing, it includes an electronic image of a truncated check and a check in electronic form. So here, one point to be noted is, so in the year 2002, the definition of check was amended. So what was amended? The definition was enlarged to include a truncated check and a check in the electronic form. So what is a truncated check? Truncated check is nothing but a scanned copy of a physical check. So this is made use from one bank to the other, that is between collecting bank and the paying banker during the clearing cycle. So even that copy is also included in the definition of check. And what is a check in electronic form? It is nothing but, just like a physical check, all the features are there in the electronic check. It's just that the drawer has to fill in the information and it should be signed by using a digital signature certificate. So this is the meaning of a check. So here remember, a check is always payable on demand, whereas a promissory note and bill of exchange is paid only after a maturity period. What is a maturity period will be specified in the bills of exchange or in the promissory note. So this is the meaning of the kinds of negotiable instrument. So remember, there are three kinds of negotiable instruments in Negotiable Instruments Act. One is a promissory note, where one person is making a promise to another other person saying he will be making a payment of some certain sum of money on a specified date. And bill of exchange is an order made by the creditor on the debtor to make payment for a certain sum of money for the value received. Next, check. Check is nothing but a bill of exchange, but it is always drawn on a banker. That means a drawee in case of a check will always be banker, and it is always payable on demand. So this is the meaning and definition of the negotiable instruments. So in the next topic, you will be learning about promissory note, bills of exchange, check in detail. That is, what is the process of promissory note, why is it called as a negotiable instrument, and how is it negotiated from one person to the other. So with this, we'll conclude the topic. Thank you.